As a bank, nobody wants their business partner to be not profitable. I can see all smiling faces of collateral managers sitting here.
So
So
I'd like to add to it. I was a part of, so, Anand has shifted from bank. Yeah, we have reversed the roles. So this was actually a challenge for a collateral manager when I was a part of that group. So, and we used to sit together and, think that how we can increase the, so I think this is where, the role, this is where we see that any collateral manager who is coming, into fray after 8 years, 7 years or 10 years is going to have a difficult time for, next 2, 3 years, 4 years. The reason is, if you see the big collateral managers like NBHC is there, NCMSL is there, or maybe on a third partner, ICICI Star Agri is there. So they have now come up with a cluster sort of an approach. And till now, in last 10 years, I don't see any IT-enabled system of monitoring which has come. I think today Indrajit had told that they have got GPS, and so the reduction of cost is going to be one of the major factors, number one. Number two, so today, can we think of something where, there is no appointment of a security guard, but a guy who is sitting in that area of say 15 kilometers, who is able to reach, or 20 kilometers, sitting at one place and doing some IT enabled, maybe 10 years back or 7 years back, ICICI has evolved a system where SMS was to come. So don't require actually technically a security guard to roam and knock out each and every door of a warehouse. You need to have an information alert systems where a guy who is monitoring knows that something wrong is going on. So if you see in almost all sectors, there has been some IT enablement and some new innovations have come, including the health industry. So one idea which I can throw right now, I do not know how to do it, but a simple chip of maybe 20 rupees, 25 rupees in per stack, maybe on a first stack if it falls, sends automatically an SMS saying that. So it may not be that, 10 years back when you planned something, even a mice, crossing that door, SMS used to come. But a stack fall or a stack in movement should come as an SMS. That is drastically going to cut the cost. This is one thing which I think that even, on that front, we can actually...
So indirectly saying, please reduce the cost, not increase the risk.
So on the increase of the cost, so banks as of today, we are actually ready to pay more. So if you see, there are 6, 7 risks. Out of that risk, 2 risks which we see that we are not going to compromise in any form is that quality and quantity, which bankers do not know, because you are the ears, eyes, everything for the bank. If you are able to share other risk with us in terms of, say, for example, say disposal risk. So if something goes wrong and somebody comes up with me and say that I have got an e-market or technological platform where we are going to dispose of, and that's a guarantee. Certainly, I'm sure a lot of bankers, including public sector, private sector, and other financial institutions are with you in terms of increasing the payout. So increasing payout is not an issue. So when we try to balance that NPA, the amount of money which the bank is getting, and amount of the share which we are giving it to you, it's all on the rod of a credit risk. So this is what...
And if you ask as a banker, what is bankers' cost? Bankers for this pledge is the most operationally costliest product for the bank. But why banks are surviving? Because at least this is collateral manager who is taking care of the stock and there are no NPAs. So provision mates are very less for the bankers also. As well as RAROC requirement is also very less when there is a defined pledge security to the... That is the reason, yes, bankers are looking at revision. Every year they keep on doing revision also. One more option he has shown is alert at the warehouse. Warehouse is always very dicey location-wise, geography-wise. So if this alert thing is working, that is really good. Then one more point, insurance settlement point he has shared. That is one point we missed is ownership of stock. How do you take care of ownership of stock when it is arrived at warehouse?
I just covered it briefly. Ownership will always remain a challenge in terms of assessment. So if you go by the Goods or Sales Acts of 1930, which says it's by way of the possession or by the warehouse owner issuing it. Now, though we have not seen significant, I would not say significant, we have not come across many cases where we have banks would have gone into a legal tussle with the customer for the double funding. But I'm saying as the frauds become more sophisticated, this is a risk which may come up. People may start taking ownership, especially in cases where the prices goes down. Because if you see all challenges which the WSP face or a collateral manager face are cases where the prices have actually gone down. You know, I see every time there's a case on NCDX for a commodity quality issue is probably when the prices have come down. The Raj can, I can make a comment, Raj may not be able to, but see the ownership will be by way of possession because there's no other way or mechanism to derive as to or earmark those things as to who owns this.
At least last few years, bankers are taking that precaution by at least taking NOC from working capital bankers to avoid double funding on the same stock.
So to add to what Anand is trying to tell, see, we as an institution have devised few methods wherein we proactively advise the WRF bank. Because see, for PSU banks, it's a different story for private banks because you have your own set of RMs who go out and meet the clients and do sourcing. But for PSU banks, we have been basically doing sourcing also. So when we do a sourcing of a client, we obviously have the entire background of that client. Right. So as a proactive practice, we advise the WR. First thing is that we would want to always go to the existing CC banks in case of an additional requirement of a WRF. If it is not possible and we have to go to some other bank which is not a CC banker, we advise the WRF bank that please write to the CC banker asking for a NOC. Unfortunately, NOC does not come. So the third thing that we advise to the WRF bank is that kindly fund into the CC account so that the CC banker gets a proactive intimation of funds being credited into the account and may want to find the source of that fund. So these are few things that we keep doing and hopefully these practices have been working very well for us.
I feel this will surely work because now RBI is also after all the banks that working capital banker or a customer should not have current account with any other bank other than the working capital banker. So that will also make the cash flow monitoring of cash flow very well for the banks as well as the source of fund will be. Coming back to the risk, warehouse is always one of the important location where this business has highest risk. And to control the warehousing, there is an act called WDRA, Warehouse Development Regulatory Act, which has been formed in 2010. And we are in 2016. Until now, almost 900 warehouses to 1,000 warehouses registered accredited under WDRA. But we are not seen much happening on that front. But now that amendment of Warehouse Regulatory Act will be there and it is happening. So there are 2-3 aspects. Warehouse Regulatory Act will be amended, then FMC has been merged to the SEBI. So this is all affecting the NCDX, and NCDX, as you know, all of you, NCDX is doing the business in professional warehouses, which has to be accredited by WDRA. So I just wanted to bring Raj into the discussion now. I just wanted to learn from Raj that what is the how accreditation process of WDRA is going on. What is your experience? And just touch upon e-warehouse receipts as well as redepository is what we are happening in e-warehouse receipts. Yeah.
Right. Just let me give a perspective of how we have traveled the journey in the last 5 years and what is the outlook from here on for the next foreseeable future, the next 1-2 years. The last 4-5 years or the last 6 years, what we have seen is standardization in terms of processes. So when we started the exchange in 2003, the warehousing industry per se was totally in chaos. So NCDX was the first exchange to actually set up professional warehousing collateral management. We set up NCML of late. We have exited that. But we found that opportunity for professional collateral management in the country. So after that, we have gone through some series of issues in the marketplace and we have gone about correcting those procedures, processes, norms. So if you look at the norms that the exchange has put in place, it's extremely detailed And we are drawn upon the global practices also in terms of how to develop a market infrastructure in the first place. And our norms have been accepted by FMC, they are being reviewed by SEBI now, and WDRA is also looking at it. So it is extremely comprehensive in terms of fit and proper criteria, what should be the net worth criteria. Like we have 50 crores of net worth criteria. When we started way back in 2003, it was something like 50 lakhs. So from 50 lakhs to 50 crores, that was a journey that we did. What is the corporate structure that a warehouse service provider should have? What are the minimum standards internally in terms of the SOPs, audit, that should be there? Then the amount of collateral that the WSP should place with the exchange. So we take somewhere between 3 to 5%. So in 2010, our WSPs were not even giving us 0%. But in terms of the safety of the market participants, we started taking that. We significantly tightened the insurance and the SOPs and also the dispute resolution mechanism. I guess given the nature of the agriculture commodities, there are going to be quality issues, quantity issues, and there are seasonality of it. So when we look at a framework, the framework should be robust enough. It should, so our WSPs, if you see, they are among the best capitalized in the country. So there are three areas that we look at when we want to resolve issues. We look at the resilience of the WSP. You know, the issues will come in. There will be quality issues, there will be quantity issues. So there is a issue of the resilience. If there is an issue, how resilient is a WSP? The second is the recovery mechanism. You know, so what are the SOPs that WSP has? What are the SOPs that the exchange has? So in terms of security deposits. So if there is a claim that comes up from the buyer or the holder, how fast can we make those claims in settlement time? You know, if you look at the legal time, then, you know, it can just go on. So it's very important to intervene at that point of time after the normal course of dispute resolution and then make good to the buyer or the holder of the commodity, because that over a period of time will bring in the confidence in the market. And the third is the resolution, that now you resolved a particular issue, but are you resolving it tactically or are you resolving it strategically? So these issues, we look at it thing. So when we look at going forward, so tactically we would have resolved the issue by getting the WSP to look at, let's say, there is a rematch sampling. So when the buyer or the holder takes the commodity out of the warehouse or at the time of taking the warehouse, we give a provision of him to test the commodity. Now there is the contract specs, and if the quality varies from what is defined in the contract specs, specifications, then obviously we hold the warehouse service provider responsible for the quality, and the warehouse service provider has to make good for the difference in the quality that happens. The buyer or the holder of the commodity also has the option to not exercise his right of testing. Then obviously he gives it in writing to the warehouse service provider and say that I am okay with it. So we build these processes which have been strengthened. As we go forward, there are two pieces of innovation which are required in the marketplace. One is on the electronic warehouse receipt registry. So this is equivalent to what used to happen in the securities side before NSDL and CDSL came in to take care of the bad delivery issues. So WDRA is in advanced stage, as we understand, to set up issue guidelines for electronic warehouse receipt registry. That's the first piece of innovation that will come in, and we all know how the equities market have grown tremendously post NSDL and CDSL coming into the market, because then you bring in the institutional capability to scale up. So if you look at the collateral management business, it's around 35,000-40,000 for the last 4 or 5 years. It's not significantly grown, it's not even shrunk from that. But if you have to move to the next level, you need institutional mechanism. The second piece of innovation that we think will come in is in the area of the clearing corporation, essentially. So the commodity exchanges have been given time for 3 years to set up clearing corporation, and this can help significantly de-risk the systemic risk in the marketplace, and this will give a lot of confidence to the banks, financial institutions to de-risk, and also to the warehouse service provider of how they can de-risk and focus more on getting more of assets under management and strengthening that framework. So these two pieces of innovation, we think one of them should happen very quickly, and for the clearing corporation, we still have 2 years of time.
Yeah, thank you. Thank you, Raj. What came out is we are going towards e-warehouse receipt, we are going towards repository. So WDRA is really working on that. It will take another 2-3 years. And once clearing corporation comes, this EWR, HR and the repository will surely give good impetus to the banks to fund more. As rightly said, to take from 40,000 to the 1 lakh, you need something different, something totally different to understand and give comfort to the banks. Very few banks are doing this business. Those who really understand, they are really doing with a passion. And yes, to take it forward, EWHR is must, and without that, we cannot take the next step forward. Then another 2 points are remaining on this part is price risk in case of commodities, how banks are managing it. We at HDFC Bank, we do M2M monitoring, then a daily pricing mechanism to manage the risk. And if there is any slight fall beyond 5 to 10%, we go for a liquidation also. So this way we manage the risk on commodity side. In case of liquidation, yes, banks are facing a lot of problems, but we are getting help from the collateral managers through their support. We are selling the stock in the market as on date also. Even there we do face local challenges from warehouses, then warehouse rent also bank has to pay. We have to manage local politics as well as local regulatory also. Both banker has to manage, without that you cannot recover that money. But this is part of the business and we do accept it. I think we have covered most of the point. We can go for question and answer. I already got a slip 5 minutes back from CI to wind up. So we can go for questions if anything. Yeah.
Inward receipt, storage, and outward receipt. From an earlier discussion, I understood it is currently 70% of the stock is stored in the NABARD sponsored warehouses, as opposed to individual warehouse operators. If that becomes, if it goes into private warehouses, then the cost of storage of that material becomes significantly high. If that is the case, will that be a viable product? Today it's free, receipt is based, inward receipt is cost is managed by the farmer, outward bagging is managed by the farmer when the goods are taken out. Storage is free in the NABARD warehouses for the period it is there. How will that be commercially viable for a warehousing operator to support that?
The NABARD, as I understand your question, you're asking is if people have to shift from storage from NABARD warehouses to private warehouses. Just to answer it in numbers, the cost may not go up by more than 2 to 4%. Because you'll see a lot of people saying working on the cost 2%, 4%. What is the rental? Rental may vary from 50 rupees to 80 rupees at a place where there's a space constraint. But what is the value of the produce? Value of the produce may be as low as 15,000 to as much as for pulses for 70, 80,000 rupees a ton. So now you compare the rentals for 6 months vis-a-vis the cost will not be more than 1.5% on an average. But with that 1.5%, what is the customer gaining? Customer is getting easy access to finance by storing it in a private warehouse. Second, when there's a private warehouse, there's an accessibility to the market is also better, because there will be some sort of aggregation which will also happen in the warehouse from other customers also. The third thing which will also be helpful is for the farmer is the professional caretaking of the produce which will happen, which will help him reduce the losses. Like if he stores it in his own backyard or in a small room, what kind of fumigation he'll be looking at. But with the produce given to a professional company, you may save 2-4% easily on the, by maintaining it properly. So if you compare it, it will always be better in terms of overall. But if you compare only as my current rental cost to my proposed rental cost, then the private warehouse will be higher. But if you compare the overall cost with the overall benefit, probably the answer will be easier to pick up, or the choice will be easier to pick up. I hope it satisfies.
Yeah, it does. Thanks.
Any other question?
My question with Raj, myself Rakesh Gar, my question with Raj with regard to WDRA. Sir, what you think? At present, I don't think any value addition by registering just a formality because of WDRA, but I have read some articles in which if you see no NWR been issued for WDRA registered, even for NCDX we are giving the electronic credit. So what at present and what in future you think the WDRA will add value for this sector?
Right. So as of now, we all know where the status is and things have not moved on. As we go forward and we expect this electronic warehouse registry to be operational from next year, we expect the draft of these documents were shared. There was a stakeholder meeting very recently also between WDR and SEBI, and in which all the bankers, the key bankers plus the warehouse service providers, the two depositories, they were all called and their views taken. So those views are being consolidated and a final request or proposal will be issued shortly.